Believe it or not, when you plan ahead, there are ways that you can maximize your tax deductions even when you go on vacation. So I'm going to take a deep dive into what you need to know to write off your vacation legitimately and what are the things that you can write off. It's a common misconception that people think in order to take a tax deduction for their vacation, there can't be any fun involved, and that's actually not true. For a trip to be tax deductible, what you do need to have is predetermined business activities. And what I mean by that is you need to be able to show that the reason you're going on this trip is for business purposes. Let's talk about some common examples as it relates to real estate investors. So a common thing might be you going to a real estate conference. Just make sure that you purchase your tickets ahead of time. Another reason you might travel for your real estate business is to look for properties or even deal with properties that you currently own. Before the trip, just make sure you have those meetings set up. We often go to different places to meet with investors that we might be working with to pitch them their deal or talk about any future investments that they may be able to make with us. So make sure you have predetermined activities set ahead of time. That could be an email where you are coordinating that meeting with a potential investor, or you have a conference call or telephone call with a lender on a property that you're about to close on. Making sure you keep record of those is very, very important, because if you're ever to get audited, the burden of proof is on us to be able to prove that we went on the specific trip primarily for business purposes. And the key here is predetermined. I'll give you two differences. If I plan ahead and I set up a meeting with a realtor and the local property manager before I head out to Florida, then I could potentially write off a lot of these costs as a business expense. Now, alternatively, what if I was just going to Florida to go on vacation with my family, and while I'm there, I happened to pick up an open house listing and I stopped by to look at it? Well, in that scenario, it's not a predetermined business purpose. I was going there for vacation and I happened to look for real estate. And having that predetermined business purpose where I can prove that the reason I scheduled my trip was for all these real estate things is what's going to make you be able to take that legitimate tax deduction. So of course, we want to know what are all the things that we can write off when we have a business trip. So if you have predetermined business activities, the flight costs from you to get from here to there are generally tax deductible. Also, what's tax deductible could be hotels, staying at a hotel or Airbnb. If you're traveling, you might need to have Uber or car rental. Those are generally tax deductible as well. Paying for internet in the hotel rooms or at the conferences. Meals when you're traveling are generally tax deductible regardless of whether you're alone or if you're dining with someone else. Again, all of this if you are traveling for business purposes. And don't forget, when you're out and about and you get good service, the tips are also tax deductible as well. For those of you traveling, a really great tip is dry cleaning also becomes tax deductible. So if you're on a business trip and you have to get dry cleaning done, make sure to keep those receipts because those are also tax deductible items too. Now, a question I get a lot is, how do I pay for these expenses? Well, if you have an LLC for your real estate business, it's best for you to make that payment, whether it's flights and hotels and car rentals, to be from the business account. Why? Because it keeps your bookkeeping simple and it helps to keep personal and business expenses separate. Now, if you're a newer investor or if you're someone who doesn't have an LLC for your rental properties, then you can also pay for these expenses from your personal account. If you do that though, just make sure you are tracking those expenses, and when it comes to tax time, be sure to send those receipts or capture those expenses and provide them to your tax preparer. Because if you don't provide those to your tax preparer, odds are your tax person doesn't know you went on that trip unless if they happen to go in. Now, here is where it pays to work with your spouse or invest with your spouse. If you are married and both you and your spouse are involved in the real estate business, involved in the decisions, then you can write off the cost of the trip for both of you. If you bought 2 flight tickets there, if you both had meals there, both of those would be tax deductible items. And this is also really great for those of you who are investing with a couple of friends from school or from work. You can all be on the trip and all of your costs could be tax deductible, provided that each of you have predetermined business activities. Now, a question I get a lot is, what about kids? If you have older kids who also work in the real estate business with you, or if there's a specific business purpose as far as why are they there? Maybe they're there to help you take pictures of properties, or they're helping you with the tenant turnover of a specific property, then the travel costs of your kids could be tax deductible as well. Alternatively, if you just have younger kids, if there's no business purpose as to why they're there, besides the fact that you have a baby that can't be left home by themselves, unfortunately, the flight cost of that baby is generally not tax deductible. And the reason for that is because that's just a personal expense if there is no business reason as far as why your child is going to be there. This is another reason why if you have older kids, you can have them help out in your real estate business in some capacity. It could be hugely beneficial if you, your spouse, and your older child are all traveling somewhere to work on your real estate or on your real estate business. Then a huge percentage of your travel costs could become tax deductible. Now, I was saying earlier that one of the misconceptions is that in order for us to take a tax deduction, we can't have any personal pleasure. And fortunately, that's not true at all. One of the strategies that we work with our clients a lot on is what we call the sandwich strategy. And what we mean by that is we have business activities in the front and business activities in the back. And in that weekend, we sandwich in some fun stuff. So a great example might be if I'm traveling to, let's say, Florida, and I book my flights and I'm traveling on a Wednesday or a Thursday. When I get there on Friday, let's say I'm going to have client meetings. I'm going to meet with a local realtor or my property manager. So those are all business days. And maybe I'm going to take Saturday and Sunday off. I'm going to go to Disney World. I'm going to go to the beach. Those are perfectly fine as long as on Monday or Tuesday, I have additional real estate related activities that are predetermined. So maybe Monday and Tuesday, I'm going to meet with some other clients, or I'm going to be meeting with a lender that's there locally, or go to a real estate meetup. But what I've done now is I've sandwiched in my weekend so that it makes my entire hotel and travel deductible because I had business purposes on the front end as well as the back end. So the next time you're looking ahead towards a trip, make sure you do a little bit of tax planning, because with some tax planning, you could potentially turn a personal non-deductible expense into a legitimate tax write-off. If you like what you heard, be sure to hit the like button and subscribe for more tax saving strategies.